Picture this: millions of empty apartments sitting across China, built but unsold, while regular people can't afford to buy a home. Sounds like a broken system, right? Today, I'm diving into a bold new idea in finance that could fix the housing crisis, not just in China, but globally: micro financing for affordable housing. This isn't about flipping luxury mansions or chasing quick profits. It's about making home ownership possible for everyday people and solving the problem of those vacant homes piling up. Inspired by China's wild property market roller coaster, this idea could change how we think about housing forever. Let's break down the problem. China's property market has been a mess. Back in 2020, it was a quarter of the country's economy, but then the bubble burst. Developers went bust, leaving behind 80 million empty flats. In smaller cities like Wenzhou, prices are still dropping, with some homes discounted by over 50%. Even in big cities like Shanghai, where a $38 million mansion just sold at auction, most people are priced out. The article we're diving into today says that 70% of household wealth in China is tied to real estate, down from 80% a few years ago. That's a huge hit to confidence, and it's why consumer spending is sluggish. But here's the good news: the market's starting to stabilize, with inventory in top cities like Beijing and Shanghai dropping to manageable levels. So, how do we turn this recovery into opportunity for everyone? Enter microfinancing for affordable housing. The idea is simple but powerful. Create a platform where regular people can pool small amounts of money, think $50 or $100, to fund affordable housing projects. These projects would focus on building or repurposing homes for the middle and working class, not just the ultra wealthy. Think of it like crowdfunding, but instead of backing a startup or a movie, you're helping build homes. Investors get a small return either through interest or a share of rental income, while buyers get affordable homes with low cost mortgages funded by the crowd. It's a win win that tackles the oversupply of homes and the affordability crisis at the same time. Here's how it could work. In China, local governments are already buying up unused land and excess housing with special bonds, as the article mentions. A microfinancing platform could partner with these efforts, taking those empty flats in smaller cities like Wenzhou and turning them into affordable housing units. Investors from around the world could chip in small amounts through an app, similar to how you'd buy stocks or crypto. The funds would go to renovating or finishing these homes, which are then sold or rented at below market rates. Blockchain technology could make it transparent, ensuring every dollar is tracked and used correctly. Buyers benefit from low monthly payments, and investors get steady returns, maybe 3 to 5% annually, without needing to own an entire property. Why is this a big deal? First, it directly addresses the oversupply problem. The article notes that in top tier cities, inventory is down to 12.5 months from nearly 20 months last year. Microfinancing could speed this up by putting those homes into the hands of people who need them. Second, it makes home ownership accessible. In China, where young people are priced out of cities like Shanghai, this could be a lifeline. Third, it boosts the economy. The article says the property slump dragged down GDP growth. Getting people into homes would spark consumer spending and confidence. And globally, this model could work anywhere. There's a housing crunch from San Francisco to Sydney. Let's talk real world impact. Imagine a young couple in Wenzhou where prices are still falling. They can't afford a traditional mortgage, but a microfinanced home lets them buy with payments they can handle. Or picture an investor like you or me putting $100 into a project and earning passive income while helping solve a social problem. Platforms like Kiva or GoFundMe have shown people are willing to crowdfund for causes they believe in. Housing could be next. In China, where the government's cutting interest rates and offering subsidies, the timing is perfect to launch this kind of platform. Of course, there are challenges. Regulations could be a hurdle, especially in a controlled economy like China's. The article mentions trade wars shaking confidence, which could make investors hesitant. And there's the risk of mismanagement. Ensuring funds are used properly will require tight oversight and transparency, which blockchain can help with. Plus, smaller cities still have a long way to go, with prices expected to fall 4% this year, according to S&P. But these are solvable problems, and the potential rewards are huge. Here's the exciting part. Microfinancing could do more than just clear out empty homes. It could create a new asset class. Imagine housing bonds where your $50 investment is part of a diversified pool of affordable housing projects across multiple cities. Or picture a rental income fund where you earn dividends from tenants' rent. This could even tie into government programs like China's Shantytown Renovation Plan, which aims to create demand for 1 million homes. It's a financial innovation that's good for your wallet and good for society. So, what's the big picture? Microfinancing for affordable housing could be the key to unlocking stalled property markets and making home ownership a reality for millions. In China, where the property nightmare is finally easing, this idea could supercharge the recovery. Globally, it could redefine how we solve housing crises. Whether you're an investor looking for impact or someone dreaming of owning a home, this is an idea worth getting behind. The housing market's problems are real, but so is the opportunity to fix them. Are you ready to be part of the solution?